Hey, it's Johnny here. Welcome. Hey, I wanted to record this quick video about benchmarking for electrical contractors. So let's dive into this. As a quick introduction, my name is Johnny with Berrett Consulting, and our accounting firm, serves electrical contractors. Um, so let's just dive right into this. What is benchmarking? Here's a definition. Financial benchmarking is the process of comparing a company's financial metrics and performance against industry standards or competitors. It involves analyzing various financial ratios, key performance indicators, otherwise known as KPIs, and other financial data to identify how a business stacks up against others in the same industry. So I spent some time reviewing financials for a company in this space that is a public company, so they're required to publish their financial reports on a periodic basis. One of these reports is known as a 10K. So the company is Comfort Systems USA, and I looked up their 10K. This is something that you can find online. I'll show you here. If you just Google search the company name, Comfort Systems USA, and put 10K in the search, it will take you to this link most likely, where you can pull up this report that's many, many pages long. I think it goes down, it's 100 pages long. Has all kinds of information about the business that they need to publish periodically to share with their investors as a public company. So this is something you can take a look at on your own and study and extract data out of this to help you with context for your own business in this space. But I pulled out some snippets that I wanted to share with you from their 10K that has to do with benchmarking, and hopefully this information can be beneficial for you. Again, this is just kind of an intro. I don't go in too much depth, but wanted to take away just a few key insights that may be helpful to you. So back to this slideshow here. So on page 3, I marked what page I found at each of these things. I wanted to point out that this company does both mechanical services and electrical services. So it's not just an electrical contracting company. But even still, I think because there are some similarities in both, looking at the financials from a macro scale, you can still compare it to your business and hopefully still get some insights. On page 5, they kind of break down which sectors they're doing services for the year of 2023 at least. Okay. So diving into this, and I think I may just pull this up. It's not as clear as I wanted it to be, so let's just pull this up on page 32. Almost there. We have the results of operations. So this is a summary of their income statement, and they have 2023 right here, 2022, and 2021. So I'm just gonna pull up this real quick. I'll just kind of cover this so we can look at just the year 2023 for now. But these guys, this is in thousands. So they do, in 2023, they had $5.2 million or billion dollars, excuse me, in revenue. Pretty large, very large public company. And then just goes down the line here. But an interesting thing they have here, and this is where we can benchmark for your company to compare these different revenue and expenses to see how your business compares operationally. So starting from the top, we have revenues, then cost of service, which would be all of, the direct costs such as labor, materials, and things like that to do the jobs. So those costs of services are 81% um, of the 100% of revenue. So that would mean they have a gross profit of 19%, and then they put in selling, general, and administrative expenses at 11%. And so after all that, the operating income is 8%, and then interest income and expense and other kind of non-operational expenses or income here, and you end up with income before taxes, which is 7.5%. So, how is your business kind of compared to this? Um, are the costs pretty similar? Cost of goods sold similar? Is your gross profit about in line with that? Is it more? Is it less? Obviously, things are going to vary quite widely depending on region where you are in the United States. What things look like, what types of services and projects that you're doing, as well as how large your company is. Overhead, which are these, selling, general, and administrative expenses can vary quite widely depending on the size of your company. Um, However, looking at this, one interesting thing to do here, besides benchmarking, is also just seeing how the company performed over time. So if we compare 2023 to 2022, for example, we can see that their cost of services, 81% in 2023. It was slightly larger in 2022. So it's come down slightly from the two prior years in that category. Um, Selling, general, and administrative costs have also come down. When you line up your financials, this could be by quarter, by year, you can check the variance, check how things are trending in your business in terms of, these different categories. And you can see here income before income taxes overall has gone from 6.2, went down to 5.7, and bounced up to 7.5. So these are some of the metrics to look at, compare your business to, and see how you compare, and then also see how you're doing over time. Let's see. So this business obviously is growing at a fast rate. There must be some kind of an aggressive like acquisition, probably a combination of their acquiring companies and also just expanding and growing. I'm not sure. There's probably a pretty good write-up in here in this 100 pages about their strategy and what they're doing. But I did notice in reading through that they had acquired other companies, so that's definitely part of their growth. Um, and so, taking it back to your company, if you look at these financial metrics for you, it's going to tell a little bit of a story. And so, we can think of what are our objectives, what are our inputs that we're doing, and what are the results? Are the results kind of um, equating to what we hope for, and the initiatives that we're doing? Is our business growing? Are we kind of stagnant? What's happening? And based on the inputs that we're putting in, are we getting the results? And hopefully, based on all the energy and work that we're putting into it, we are getting results, and we're having trends of, if that's the goal of increased revenue, that we are getting increased revenue. And if we're working on tuning things in terms of like operational expenses, maybe we want to bring those down. Maybe they're good where they're at, but we want to work on the cost side and making sure that we're bidding things accurately so that the revenue is adequate, where the cost is in line with, maybe around this 80% for your company. And after all that, hopefully will be similar to this company in that they are growing in value. I'll show this larger here. This is from page 27. They put in this comparison of 5-year cumulative total return. So they put $100 invested on this date, including reinvestment of dividends, like how the company performed compared to the S&P 500, stock on the stock exchange and the Russell 2000. So you can see that their performance compared to like average other companies has done well. And so for you and your business, maybe you've even outperformed comfort systems. And that could be an analysis that you look into of, how much could I have sold my company for example, how much would it have been valued in 2018? And that's probably a function of like how much was your revenue, what were your contracts looking like, what were your assets versus your liabilities. So what was your stockholders' equity at the time in 2018 versus what was it at the end of 2023? And it could be that you had performed, even greater than comfort systems. It could be that you can perform somewhere between, S&P 500 and comfort systems. But that might be an interesting thing for you to look into, of what is the value of your business and how has that changed over time. Uh, so just wanted to go over those things. A little bit of food for thought is, ways to increase value could be increase operational efficiencies towards best in class, meaning, your cost of goods sold and your operational costs are in line with kind of the best in class for electrical contractors. Another way to increase the value of your company is to increase, the amount of revenue over a period of time. So those are just a couple thoughts. Of course, there are many other ways that you can increase the value of your company, and but just a few thoughts for you. I'm curious what you think. Thanks for watching this. If you'd like to learn more about benchmarking, if you'd like to have some financial analysis done for your company, that's something we can definitely talk to you about. Don't hesitate to reach out to me with any questions that you have. I'd love to hear your questions or feedback. Once again, this is Johnny with Berrett Consulting. Talk to you next time.